All right, we are recording the meeting, and I'm sharing my screen. What do you guys see? Can you see my screen?
Yes.
Yeah, I can see your screen.
Okay, good. All right. So let's start off. Does anybody have any questions about Module 1? No?
None yet.
Okay. All right, so a couple of things, just administrative items. Please make sure you're turning your homework in Excel. If there is a written problem of some sort, like there was in Module 1, just put it somewhere at the beginning. You can just start writing in one of the cells and it'll carry on. You can also merge in cells and stuff like that if you want to make it neater. If you don't, that's fine too. I'm not going to take off a whole lot of points for formatting and things like that. In fact, I'm not going to take points off for formatting at all as long as I can read it. So don't get hung up on formatting or anything like that. I am really, really easy to work with. I just want to make sure you're doing everything in Excel that you can be so that you get practice with it, and you also practice with doing formulas and things like that. Second thing, you can go back in and take a look at your quiz after it's completed, okay, and see what you missed. So I know I had several questions about that, but you can go in through the gradebook, and there's a little drop-down arrow key to the very right of the cell where your score is. You click that, and you basically view the details, and then go in and view. When that next screen pops up, then you view results. And it'll go in and it'll tell you what you got right, what you got wrong, things like that. So if you're interested in that, I just wanted to kind of go over that real quick. Third thing, next week we are going to have only a question and answer session on Tuesday at 7. There is a webinar for modules 3 through 8 that is already posted out there. These are the webinars that I did with the class last fall, and it's the same problems. So, just go out, view those webinars. I will go out and put an Excel template out there for you. We do have one for tonight, and then Tuesday when you come into the live webinar, if you have questions, and that would be the reason to attend the Tuesday webinar. So that also forces you to kind of go through and do your homework a little bit ahead of time so that you know what questions you might have if you're not understanding something or what have you. So just make sure that you're prepared for that, and if whatever, come with questions. If nobody comes and doesn't have any questions, then there won't be another recording. So it'll be completely up to you guys on that next one. We will not be going through Module 3 on Tuesday. It will just be a question and answer session. So, and feel free, you can come and ask questions if you've got questions about Modules 1 or 2, if something you're just not getting. That's kind of the way we're going to do this. So I will post that recording. Hopefully it won't be much more than a half hour long. So it should be a pretty quick one. But, just come with your questions prepared. All right? Does anybody else have any other questions that we need to cover right now before we start going over Module 2? Go ahead. Dan? Did you have a question?
Oh, sorry, my headphones weren't working for a second.
Oh,
My question was, are we allowed to take the quiz early? The reason why I ask it is I have to travel for work,
uh-huh.
and I was just curious if we can take the quiz early next week.
Yeah, it'll be available as soon as the mod. In fact, it's probably available right now. I can go and look. Let's see. 3. Yeah, it's available now. The
Okay.
5 quiz. So you can take it anytime you want if you want to take it early. The only thing
Okay.
is just don't take. I just ask that you're not late, and understand if you have to turn in an assignment late, it's going to be penalized by 10%.
Yes. Yeah.
So that's standard across the board. Um, and unless you're in the hospital or your little one's in the hospital or significant other or parent or something like that, I understand medical emergencies, and I also understand family emergencies, things like that. Um, but other than that, it's always best to be early. I try to turn all my stuff in early because you just never know when something's going to happen. So, but yes, so you'll see here, starting module 3, there's actually 2 webinars out there already because last year when I was doing this, we had a couple groups that, one wanted one on Sunday, one wanted one on Monday. So I tried to accommodate that for a while, but it was getting to be a little bit too much. So there are 2 webinars. They're pretty much the same. It's going over the same stuff, so you guys can listen to one or the other and probably get everything you need to out of it. Okay? Um, let's see, what else? What else do we need to talk about? Everybody did great on Module 1. All of the grades are posted for Module 1. So, really good efforts out there. Just keep up the good work. Keep working hard. Keep studying hard. You guys are going to get this. I know one thing that I told a couple people is don't overcomplicate accounting. Don't think too much into it. Sometimes we can all get a little over analytical, and I'm probably one of the worst ones for that. But these problems are very straightforward, with the exception that you might have to calculate something, work your way back into something. So calculate it backwards. But accounting is all about addition, subtraction, multiplication, and division. That's it. Okay? The biggest thing you really need to know from accounting perspective is where does everything go and in what direction. So is it a debit? Is it a credit? Does it belong on the income statement or the balance sheet or the statement of cash flows? That's really, in a nutshell, everything you need to know. And then how does each thing interact with each other? So if you have revenue, where does revenue offset to? Accounts receivable, right? So that's literally it. If you go through and you study that and you understand how all of this stuff's coming together, then you're fine. You're going to be able to build this stuff out. You do need to understand how to build these journals and what you're going to be offsetting them to and things like that. So we're going to kind of go over that a little bit tonight, and that's pretty much module 2 is creating adjusting entries, closing entries, and then creating an income statement, balance sheet, and adjusted trial balance. Those are the 3 things that we're going to cover tonight in chapter 3. Okay, so this is a pretty simple module. It's your shortest module with your fewest problems, so enjoy it. So, all right, let's go ahead and get started. Okay, so chapter 3. Chapter 3 is going to talk about the accrual basis of accounting. So what's an accrual? Does anybody know? Has anybody read the chapter already? You guys are awful quiet. help you out. So an accrual is basically a way of making a journal entry, okay, saying that we know this is going to happen at some point in the future, or that some expense or revenue is going to come across at some point in the future, and it's going to happen in this month, so we really need to recognize it, okay? We really need to make sure that that's included. When I say recognize, what I mean is that that's included in our financial statements, okay? So we're going to accrue it, okay, which is basically a journal entry that's typically reverses in the next month and is replaced with the actual transaction. So let's say, for instance, okay, you sell something to a customer, right? And you know that that customer is going to pay you, and you technically sold it on August 31st, but you didn't find out, your salesperson didn't let you know until September 1st, when your system had already gone past August 31st, that they had made that sale. So you're missing it, right? You're missing it in your financials. You can put an accrual in for August saying, hey, I sold so-and-so, $1,000 whatever widget, okay? And you can reverse that out in September and actually put the real transaction in as of September. The thing that you need to understand is there are a lot of systems, computer systems out there and financial systems, that they go based off of your computer's date. Okay, so they go and they look at what's today in the computer. And they're saying, okay, it is September 8th, but we actually made this sale back in August. Well, I'm going to still date it September 8th. Well, that's not technically correct because we really made the sale in August. So you have to go back and basically put in an entry to show that you made that sale. That's what an accrual is. Same thing goes for an expense. Okay, let's say you know that you're going to have to pay $1,000 a month rent for your building. Well, that's going to be pretty much steady for the rest of the year. You can put an accrual in and show that out there in your expenses going out for the next month or the next month, even though you may not get the bill or the transaction may not hit the bank. Let's say you have it set up automatically. It may not hit the bank until the next month, but you don't want to take the chance of showing that you've got $2,000 rent payments in 1 month. So you hit an accrual, you put in an accrual to pull it back and put it in the right month, okay? Or to push it out and put it in the right month, whichever way. All right, so that's basically accrual basis of accounting. So let's talk about revenue recognition for a minute. Revenue recognition is basically saying we want to recognize all of the revenue that we had in a given month, okay? So where this comes into play, let me give you a for instance. For instance, you buy a subscription of some kind, okay? And let's say you buy a magazine subscription, okay? And they charge you $50 for the magazines for the entire year. According to GAAP accounting principles, which we studied back in Module 1, you cannot recognize revenue until you've delivered that product or service. That is a rule. So, yes, you've just charged your customer $50 for the subscription that covers an entire year, but you can only recognize 1/12 of that each month because you're only delivering a magazine to that person once a month. So you have to take that 50 and divide it into 1/12. okay, and then split it out over the course of a year, okay. All right, so here are some cases that it talks about revenue recognition. Cash is received when earned, and that's how you would do the entry. You get your cash and your revenue. Okay, cash is received after earned. This is where you notice the difference, right? You've got, if you get the cash up front, you hit revenue and you hit cash. If you don't, you hit sales revenue and you hit accounts receivable, because you're expecting to get that receivable in at some point. When you do get that, when they do send you a payment, this is how you recognize it. So accounts receivable and cash, because you have to back out. You see how you had a debit here to accounts receivable? Well, you have to back that out of accounts receivable and put it into your cash. Does that make sense? So if you've got an accounts receivable debit up here, the credit is going to be pulled out of accounts receivable and put it into your bank account.
So the accounts receivable goes back to zero then?
Yes.
Okay.
So later on, we're going to start talking about subledgers for customer accounts. So here's where that kind of plays in, because you want your customer account subledger to eventually have a zero balance. You want your customers to pay you and pay off everything, but you also want to be able to track what they owe you. So that's called an accounts receivable subledger, because it's not actually impacting it's not shown on your financial statements, but it is in play. So it kind of helps you to determine how a customer's paying, right? So we'll get into that later, but accounts receivable goes and sales revenue offset each other when somebody doesn't pay cash up front, and then when you do collect the cash, you take it and debit it out of cash and credit it to accounts receivable, so that accounts receivable balance goes to zero. Okay? If you receive cash before revenue is earned, so let's say that they pay you up front, okay, and you have not delivered, you have to hit cash and unearned revenue, okay, because you haven't earned that revenue yet. That's GAAP accounting. You have to wait until you've earned it before you can recognize it. Keep that in mind, okay? So then when you do deliver it, then you're going to, as you see here, debit unearned revenue and credit sales revenue. So that's where, just keep this in mind, mark this page, use it as a reference until you really get used to it. I promise you, the more you practice these, the easier this is going to get, okay? Expense recognition, the matching principle, okay? All that's saying is that we want to recognize our expenses in the month that we incur them, okay? So again, you're taking a look at, I had to buy here for Krispy Kreme baking supplies of $50, okay? So I debit that $50 and I credit cash, okay? Now, this is the balance sheet side, okay? Because these are supplies. Supplies will always go on the balance sheet, okay? If it said baking supplies expense, that would go on the income statement, all right? So that's why I'm saying you need to make sure you're getting used to where these things are supposed to go, okay? Now, let's say we bought those baking supplies on account. So we didn't pay cash for them when we got them, okay? That's where this is going to go to accounts payable, okay? So if you bought those supplies on account, it's accounts payable, because at some point you're going to get an invoice that you're going to have to pay for those baking supplies, okay? In addition, you are going to show a cost of good when you sell the donuts that you needed the baking supplies for, you're going to show a cost of goods sold, because that's a cost of those donuts that you just made that you sold. Okay? So cost of goods sold and your baking supplies, right? That's the offset when the expense is recognized when the donuts are sold. You have to create that journal entry. Okay? So keep in mind, to recognize the expense down through all of this, it's either this or this and this when you sell it. So just make sure you don't forget those entries. Okay, this last one is just as important. All right, so then we talk about adjusting accounts. Okay, so the end of the period adjustment process begins with the preparation of the trial balance, which we did last week. Okay, because of this, trial balance reports the account balances before any adjustments have been made. It's referred to the unadjusted trial balance. So this is like, what this is saying is, okay, at the end of August 31st, these were my balances in these accounts. That's the unadjusted trial balance. The adjusted trial balance is when you go in and you say, okay, now for all of September, these are my adjustments to that August ending balance. Okay, and then I calculate my September adjusted trial balance. Okay, so this is kind of what that looks like. All right, so this is as of December 31st. This was our unadjusted trial balance for each one of these. Okay, and then you add in all of these adjustments. So tells you what prepaid expenses are, unearned revenues, accrued expenses, and accrued revenues. You need to know what each one of these are. Okay. Then as we move along, we're going to talk about allocating previously recorded assets to expenses. All right. So basically, this is on your balance sheet again. Okay. So here's your accounts payable. Here are your office supplies. All right. And this is when they purchased on account and recorded the expenditure in an asset account. Okay, because when you purchase supplies, those become assets. Okay, so this is why this is on the balance sheet. Remember, your balance sheet is going to contain assets, liability, and shareholders' equity. Okay, those three components. All right, assets are things like your bank accounts, your accounts receivable, your supply accounts like this. Okay, your liabilities are going to be your accounts payable. All right, any loans that you might owe to somebody, so your debt. Okay, and then of course you've got your shareholders' equity like your stock and things like that. Okay, prepaid rent is another asset, because even though rent sounds like something that would be, along the lines of an expense, if you prepay it, it becomes an asset, because that's money you had that you put out to secure your rent for the coming months. So it's actually an asset. Okay? Depreciation. All right. This is the process of allocating the cost of buildings, equipment, and vehicles to the periods benefiting from their use. Okay? So, let's say you bought a company car, okay? And you're going to pay that car off over the next 60 months, all right? So depreciation says my useful life of this car is 5 years, 60 months. And I'm going to allocate that over the next 60 months. So the cost of it, the monthly car payment, is going to be what you depreciate each month. Okay? There's several ways to depreciate that you can take a look at. There's straight line, which is the most commonly used. There's accumulated depreciation as well. And so this is kind of telling you, and we'll get into depreciation later on in more detail, so don't get too hung up on it. The biggest thing right now for you to know is, where does depreciation go? Okay? So anything, as I told you, anything that ends in the word expense goes on the income statement. So this depreciation expense is going on the income statement. The accumulated depreciation will always go on the balance sheet. Okay, so here's your income statement entry, here's your balance sheet entry. So you're going to debit depreciation expense and credit accumulated depreciation. Okay? All right, let's see. Deferred service revenue, same thing. This is revenue that you have not yet basically earned. Okay, so deferred service revenue would be something like, okay, I bought a service contract for my computer, right? So say Geek Squad at Best Buy, all right? They promise that they're going to service my computer for the next 12 months. Well, they haven't actually earned all 12 months of that revenue just because I paid for it. Okay? So they have to split it out like this. It has to be split out each month. Okay? All right. Accrued wages. Okay? This is basically helping you deal with those wages that, you know, a lot of companies pay in arrears. So, for instance, you know, you might work, when you start a new job, you might work a week or two, depending on how often they pay, before you get your first paycheck, right? So the company knows that you've worked 40 hours a week, but they have not yet actually paid you for those 40 hours of work. So in this case, you're actually going to do an entry that says debit your wage expense and credit your wages payable. Your wages payable is a liability, okay? Because that says, hey, I owe my employees this money. The wage expense is on the income statement, okay? All right. Accrued interest, this is interest that you might accrue on a loan, okay? And fees, this is stuff like bank fees, okay? So, you know, the bank charges you $10 a month for your checking account. That's where this would go, okay? There are other examples in there too. And accrued interest, this is an example of accrued revenue. So it can go two ways. Like if somebody owes you money, you can accrue interest on it. If you owe somebody else money, then you still continue to accrue interest on it, just in a different manner. Okay? So make sure you're really reading that and understanding what a problem's asking for. I don't think there was anything that came along that was too tricky about accrued interest, so it's typically pretty straightforward. All right, so given all of that, here are the adjusting entries that we just went through, okay? So this is your general journal, and this is what you would be creating, okay? All right, here are 4 types of accounting adjustments, okay? You need to read those and understand them, all right? Use this as a reference. And then once you've done your adjusting of journals, you're going to create your trial balance. Now, make a note of this page right here. Okay, this is page 128. This adjusted trial balance is exactly what I want to see you be able to do. Okay, so you have your unadjusted trial balance. This is the balance as of the end of December 31st. Okay. Then you've got all your adjustments that come in here from where? Right up here. Okay? So they come in from that journal entry that you just did. Okay? And all this is doing is adding all of these up, adding all of these up. You add these up and you add these up. And then you subtract them, or you go ahead and you add across like this, right? So in this case, you've got, this is where it gets a little tricky. So this one, you've got a debit here, but you've got a credit here. So those two get subtracted out, right? Same thing with this. You got a debit here, you've got a credit over here. These two will get subtracted out. Anything that's on the same side as itself, so the debit and the debit, gets added together. Does that make sense? Anybody have any questions about that? Okay. All right. Then you come down and you're going to add all of these together. You're going to add all of these together. Now, notice 90,100, 90,100, they balance. It has to balance. Has to equal 0 when you subtract the two out. Okay? Same thing here. 5580, 5580, they balance. If you don't get a balance, then you've done something wrong. That's your check. Okay? If it does not balance, you need to go back through and make sure you didn't forget something or put something in the wrong place, because it has to balance. Okay? Same thing for the adjusted trial balance. All right? So make sure you mark that page. That's page 128. That's a good example. Then we talk about preparing financial statements, and you guys can read through all of that. So this kind of shows you the flow from the adjusted trial balance, right? So here you've got your adjusted trial balance. These are all of your asset accounts, right? These are your liability accounts and stockholders' equity, okay? Your dividends go here on the statement of stockholders' equity. Then you have your fee revenue. This is going right here. That's where your revenue goes on your income statement. Finally, you have your expenses, and that's where all of this goes. Once you get those numbers plugged in, it is very easy to go down and figure out what your assets and your liabilities are. Again, notice they balance, okay? It is very easy to get your statement of stockholders' equity, because we know at the beginning we had the 30, it's still 30. Then you've got your net income, which is right here, okay? This net income number comes in right there. It's also under retained earnings, okay? Then you've got less your dividends that you paid out. Those are dividends that you paid to your shareholders, okay? And then you've got your balance as of December 31st for this statement of stockholders' equity. All right, you can see these two add across and this adds down, okay? Your income statement, same thing, okay? You just take your $19,150 in revenue and subtract out your supplies. That's going to give you your net income, all right? So mark this page as well. This is page 130. It tells you exactly where everything is supposed to go. All right? If you want to, make a photocopy of it and keep it as a cheat sheet, because it will help you on every homework assignment and every test that you take. Okay? All right, so let's move on. That's, again, the adjusted trial balance. And then the closing process. So the closing process, basically all that's doing is saying, okay, we take a look at our accounts, make sure everything lines up, our balance sheet balances, you know, things like that. Everything's been recorded. We're ready to lock the month down. And that's what we call close. That means that once we close, Nobody can make any other entries of any kind. So you can't enter any more revenue, etc. You can't enter any more expenses. Your balance sheet is what it is, so you're done, basically. Okay? You lock that month down. You don't make any changes to it going back. All right? All right. So closing the accounts, that's what this looks like. And basically it's just, recording fee revenue, getting your retained earnings, figuring out your dividends, stuff like that. It's all stuff that really doesn't have to do anything with revenue, expenses, assets, or liabilities. Okay? All right. Here's the accounting cycle again. We saw this in Chapter 1. Okay? And quality of numbers, you always want to make sure your numbers are accurate. One of the biggest problems you'll find in the accounting world is that not everybody has the same attention to detail. So you really have to know where things are supposed to go and be able to analyze whether or not that entry or that financial statement makes sense. Okay, so if you're seeing huge swings that are completely unreasonable, okay, that's one good way to tell that somebody apparently did something wrong. Maybe they added an extra number to an entry or something, but that's where you have to find it, when something looks totally unreasonable. Okay? All right. So that is Chapter 3. All right. So we are going to go on to the homework. Does anybody have any questions right now? All right. Let's go to exercise 3-3B. All right. So exercise 3-3B. All right. So in this, it's asking you to record these entries. All right. So you're going to basically come down and read through these and figure out where they need to go. So A is unrecorded depreciation on equipment, $900, right? So you come over here and you say, okay, if that's the case, I need to debit and credit depreciation expense and what else? Accumulated depreciation, because that's what we said depreciation entries went against. So we're going to debit depreciation expense. We're going to credit accumulated depreciation expense, right? So that's what you're doing with these. Okay, so the supplies on account, the on the date of preparing financial statements, etc. Now, I am going to take that out. I want you guys to figure out some of this stuff because it's all the same. All right? Okay, so that's what you're doing in exercise 3-3B. In exercise 3-12B, you're going to, again, prepare journal entries to close the accounts directly to retained earnings. After these entries are posted, what is the ending balance in retained earnings account? Okay, so it's telling you what your closing entries are. All right, you have to figure out what you need to put in here to close out retained earnings. Okay, so that's going to require you to go back up to this closing process section and figure out how you're going to close and get your retained earnings, which is literally right here. Okay? This is what you need to be looking at for those. All right? So that's on page 133. And then your final problem is asking you to do an adjusted trial balance, an income statement, and a balance sheet. Now, you're going to do all of this in one, okay? So, what it's going to look like when you're done is you're going to have sets of numbers with, and you're not going to have a number in every column, keep in mind. So, on here, let's see, this is 3-14B. Okay, so 3-14B, here are all of the numbers that they give you, okay? So you're basically going to first prepare the adjusted trial balance, and then you're going to prepare the income statement and the balance sheet, okay, and put it all together. So this is going to force you kind of to understand where things go, like where does rent expense go? Can somebody tell me? Come on, guys. Where does any expense go? Somebody?
It's a debit.
Huh? Does it go on the income statement or the balance sheet? All expenses.
Income
statement.
Income statement. Very good. Very good. Okay. Where does a payable go? Where does anything payable go? Income statement or balance sheet?
Balance sheet.
Balance sheet. Where does a receivable go?
Balance sheet.
Yep. Where does cash go?
Balance sheet.
Very good. Excellent. So those are the types of things that you have to be able to identify in order to do this final problem, okay? Because that's going to tell you, okay, my cash goes on the balance sheet, my expenses all go on the income statement, you know, my net income is going to be on the income statement, so your numbers for net income will not be over here, all right? Or, well, yeah, your numbers for net income are only going to be over here, okay? Your totals for this one are only going to be in the adjusted trial balance, okay? So I'll mark that. As adjusted trial balance, ATB, okay? Net income is only going to be on the income statement, IS. Your totals, this is for IS and balance sheet, okay? So that total is going to have numbers over here and over here, okay? So, and what are you going to make sure happens on the income statement, the balance sheet, and the trial balance? What do these totals have to do?
Balance.
They have to balance. Very good. They have to match. Okay? So if they don't match, you're missing something. So that is chapter 3, everyone. And is there anything else you can think of? Make sure you're using, I know people don't believe me until they actually do, but make sure you're using this study guide before you take the quiz. Okay? If you use the study guide, it should help you on the quiz tremendously. And I would recommend just downloading it and answering the questions as best you can. Put everything you need to know about that particular thing. Okay? I know it's a little cryptic, but it's the best thing you're going to get to having the questions that are on the quiz. Okay? So do the study guide before you take the quiz. Okay? That goes for every single week. Any other questions about the homework? Let's save this as Module 2's. Maybe.
Can you go over just one more time in the closing process the difference between the permanent and temporary accounts? I'm still a little confused.
Sure. Okay, so let's go back to the book. Okay. So the permanent accounts, as it says here, are accounts that are presented on the balance sheet. Okay, so don't let the terminology trick you up too much. Permanent accounts are always on the balance sheet. That is the balance sheet. They're permanent. Okay, temporary accounts are used to gather information for a particular accounting period. Okay, so this is stuff like revenue, expenses, and dividend accounts are temporary subdivisions of stockholders' equity. Okay, so there was a quiz question in Module 1 about this, and I know some people were likely confused by it, but what this is saying is stockholders' equity, you have to think about this, that's sitting on the balance sheet, right? It is permanent, okay? But stockholders' equity contains a lot of things because stockholders have equity in their income, right? Where is income? Off of the income statement. Okay? So you have to think about it a couple of steps back. Does that make sense? So at the end of the accounting period, the temporary account balances are then transferred to retained earnings. So that means anything that's on the income statement gets pushed to retained earnings, okay, which is then on the balance sheet. So the permanent accounts are always on the balance sheet, okay? A lot of people don't realize it. A lot of people get hung up on looking at the income statement. Like say you were going to go buy stock in somebody, all right? You might think, oh, I'm going to go take a look at their income statement and see how profitable they are. Okay, that's fine. That's a good thing to do. But why wouldn't you start with their balance sheet? Because their balance sheet is the permanent account. It tells you what's happening at that company on an ongoing basis. Because on the balance sheet, you don't actually clear out those accounts. It's constantly building. So it's the balance. So like 1 month, your cash may be $1 million. In the next month, it might be $1,500,000. Okay? The next month, it might be $2 million. Because each month, you're making $500,000 in revenue. So that says something about your company. It says, hey, my revenue is continuous, right? It's not necessarily growing, but at the same time, it's continuous. So to me, I go take a look at a company's balance sheet first thing because it's going to tell me what their cash looks like. So do they have enough in reserves? It's going to tell me how much money they're owed. It'll also tell me if they're owed a lot of money and they're only making like $500,000 in revenue every month, they're not collecting it. That's a problem. It's great if you're booking revenue because you think you're making sales, but if nobody's paying you for your sales, you got bigger issues. Okay? So this is why they have what's called the permanent accounts and the temporary accounts. Okay? The temporary accounts are just telling you what your performance was in that given period. Okay? Does that make more sense?
Yes, thank you.
Not a problem. Not a problem at all. And this is where accounting can really help you in your own personal life, because I'm quite sure that as you go on and you get your business degrees, or even possibly now for some, that are working their way through school, you might have 401ks. And they might say, well, why don't you invest in this mutual fund or in this, conglomerate that we have in your 401k? Well, I want to know what's in that. And then I want to go out and take a look at their financial statements and see how they've been performing over the last 5, 10, 20 years. Okay? And I will, because they're all public companies, okay, I will go out and take a look at them and see what's been going on. You can learn a lot by somebody's balance sheet. You can see how much debt they have. I mean, if they're making lots and lots of money, but they've got a ridiculous amount of debt, that's not a good sign either. Okay? So this can help you. This is where accounting helps you even in your personal life, because you can make a lot of money off of stock if you choose wisely. If you don't choose wisely, you won't make anything. You'll lose money. Okay? So just keep that in mind. Everybody's like, at the beginning of these financial accounting classes and managerial accounting classes, oh, I'm never going to use this again. Well, yeah, you could. If you ever own your own business, you will use it. If you ever buy stock or invest, you can use this information, because now you understand the inner financial workings of a company. And you can say, does that make sense? Or, does it not make sense? Are they fudging the numbers? Because a lot of them do. Are they trying to paint a prettier, rosier picture than maybe what's actually accurate? A lot of them do it. But if you learn this inside and out, you can read between those lines and figure out just what is the truth. Is that company really in trouble? Okay? So don't discount taking accounting classes, because they can be your best friend for the rest of your life when it comes to your finances. All right? Anybody have any other questions? Is this making sense?
I think so. It certainly has helped me to talk about it, that's for sure.
Right. Good. Good, good, good. I know it seems overwhelming and confusing in the beginning, but like I said, the more you practice, the more you look at these financial statements, the more it's going to click. Really try to follow the numbers down, okay? Really try to follow them all the way through the process, especially in your examples throughout the chapters, okay? So like, the closing process here. These chapters have excellent examples that, like for instance this, financial statements prepared from adjusted trial balance. It literally is telling you where each and everything comes from. Okay? So follow it. Learn it. Okay? Keep this page very handy, because you're going to need it throughout this class. All right?
Thank you.
You are quite welcome. Let me know if you have any questions. I will try to get your homework all back to you, hopefully Saturday. I don't have any plans this weekend, so that shouldn't be too hard. Okay? Everybody keep up the good work. Don't hesitate to email me or text me or whatever you need to do to ask a question. Okay? All right, everyone. You are free to go. Have a good evening. Have a good week, and I will talk to you soon.
Good night.
Night.